There is a silent shift happening, a quiet disturbance in the financial world that you need to be aware of right now. This is not about some distant, abstract threat. It is about the money in your bank account, the value of your home, and the security of your retirement. The economic landscape of 2026 is being redrawn, and if you are not paying attention, you risk being left behind, watching the value of your hard-earned money slowly but surely erode. This is not a time for panic, but it is unequivocally a time for action. The rules are changing, and complacency is the single greatest risk you face today. The winds of change are blowing from many directions at once. New governmental policies set to take effect in 2026 could directly impact your take-home pay through altered tax codes. They could change how much interest you earn on your savings. They could change how much interest you pay on your loans. The stability of the stock market is perpetually tenuous, reacting with volatility to global news and domestic policy shifts. Even the very banks you trust are adjusting their fee structures and changing service terms. Potential adjustments to pensions and social benefits could dramatically alter your financial reality. This is a warning for everyone, not just the wealthy. It is for the single mother working 2 jobs, the young couple saving for their first home, the factory worker contributing to a 401k, the retiree living on a fixed income. If your financial life is not fortified, you are exposed. The danger lies in inaction. The belief that it will not happen to you, or that you will deal with it later, lets small vulnerabilities grow into catastrophic losses. Your money can shrink through inflation, new taxes, and unforeseen fees. This is the moment to wake up. This is the moment to stand up. This is the moment to take control. The good news is that you hold the power to protect yourself. You do not need to be a financial genius or have a massive fortune. Small, intentional choices create a foundation of strength. It is about being smart. It is about being deliberate. It is about refusing to be a victim of circumstance. Your financial security in 2026 and beyond will be determined by the actions you take starting this minute. Beat. Your absolute first line of defense is an emergency fund. This is non-negotiable. It stands between you and disaster when the unexpected happens. Job loss, a medical crisis, a sudden car repair. In a volatile economy, this fund is critical. Your goal: 3 to 6 months of essential living expenses, housing, utilities, food, transportation, insurance, nothing more. Calculate it and write it down. Start with 1 month. $1 at a time. Variable income? Aim higher, perhaps even 8 months. Not stocks, not locked CDs. Use a high-yield savings at a federally insured bank or credit union. Keep it separate so you are not tempted to dip in. Think of it as break-glass money. Only true emergencies qualify. Maria earns $3,000 a month. Essentials total $1,800. She automates 50 a week, cuts 2 subscriptions, and redirects the savings, over $3,000 in a year. It may not sound like much, but it gives Maria's family protection if something unexpected happens. Your next priority: attack high-interest, unsecured debt, the financial cancer that is credit card debt. 18%, 22%, 29%. In this economy, that debt is like swimming with anchors tied to your feet. List who you owe, total balance, minimum payment, and most importantly, the interest rate. Arrange from highest APR to lowest. This is your battle plan. Pay minimums on all. Every extra dollar attacks the highest rate debt. No exceptions. 10 here, 5 there. It adds up faster than you think. When one is paid off, roll the entire amount to the next. Momentum builds. Paying off a 22% card is an immediate, guaranteed 22% return. It lowers fixed expenses and simplifies your life. Financial leaks, forgotten subscriptions, unnecessary bank fees, mindless daily purchases. Become a financial detective. Go line by line with a highlighter. Question every charge. Be honest. Be ruthless. Cancel anything not adding value. $12.99 a month is over $155 a year, redirected to savings or debt. Avoid maintenance fees. Use free checking via minimums or direct deposit. Call to switch off annual card fees. Treats are fine, weekly, not daily. One small change can save over $1,200 a year. Scrutinize spending and cut waste. You are not depriving joy. You are building strength for whatever 2026 brings. Beat. Diversification is bigger than stocks and bonds. Do not keep all your liquid assets in one institution. Insurance is a safety net, but one bank can mean access problems in a crisis. Spread cash across 2 or 3 unaffiliated institutions. Keep checking and your emergency fund local. Park a future goal at a higher APY online bank. If one bank glitches or freezes, you still have immediate access elsewhere. Keep a responsible amount of physical cash in a secure home safe, not under a mattress. Enough for 1 to 2 weeks of essentials in case of outage, cyber attack, or disaster. This small reserve provides immense peace of mind. Do not rely on a single paycheck. Add a small secondary income for buffer and control. The uncertainty of 2026 demands a calm, rational approach to long-term savings. Selling everything or chasing risky returns, both are mistakes. Retirement accounts are long-term. Set allocation for your age and risk, and stay the course. Far from retirement? Keep contributing. Within 10 years? Prioritize wealth preservation. Gradually increase bonds and cash equivalents, decrease stocks to protect capital. Uncertainty breeds fraud. Use strong, unique passwords. Enable 2-factor authentication, and review accounts frequently. Approaching retirement? Consider working a bit longer, even part-time. Delaying Social Security can increase lifetime income. A part-time role adds cash flow so you are not forced to sell investments in a downturn, buying time for accounts to recover. The economic changes of 2026 are real, but they do not have to be a source of fear. Let this empower you to act. You do not need wealth or expertise, just a simple plan and discipline. Build your emergency fund, eliminate toxic debt, and be mindful of every dollar. Goal 1. Open a separate high-yield savings and automate $25 a week. Goal 2. Cancel one unused subscription. Goal 3. Pay an extra $50 on your highest interest card. Small, achievable targets build momentum and confidence. Do not panic sell. Do not pull all cash home. Do not chase guaranteed high returns. Discipline and consistency win. Build your cash cushion, attack high-interest debt, and spread your money safely. If you've learned something from this video, go ahead and hit that like button and subscribe for more actionable ways to manifest money. Think it, believe it, become it.